What happens when the richest man in the world starts losing his crown? Imagine building a luxury empire so powerful that it controls the world's most iconic brands, and then watching cracks begin to form at the very top. This isn't just about money, it's about power, prestige, and the high-stakes world of global luxury. For decades, Bernard Arnault stood untouchable, leading LVMH to dominate fashion, jewelry, and high-end culture. But even kings of luxury aren't immune to shifting markets, bold rivals, and unexpected challenges. So what really happened behind the scenes? Is this a temporary setback or the beginning of something much bigger? In today's video, we uncover the rise, the pressure, and the turning point that could redefine the legacy of the so-called luxury king. If you enjoy deep dives into powerful stories like this, make sure to subscribe, like this video, and drop your thoughts in the comments below. Let's get started. The rise of a luxury titan. Before the fall, there was an extraordinary rise. Bernard Arnault wasn't born into luxury fashion. He started in construction, working in his family's business in France. But he had bigger ambitions. He saw something others didn't. Heritage brands weren't just businesses. They were emotional assets with untapped global potential. In the 1980s, he made a bold move. He acquired struggling textile and fashion assets and slowly began building what would become LVMH. At the time, many doubted him. Luxury was fragmented, traditional, and resistant to corporate consolidation. But Arnault believed scale and exclusivity could coexist. But this wasn't luck. Arnault had a strategy. Buy heritage brands, preserve their exclusivity, modernize them, scale them globally. He invested heavily in creative directors, expanded retail networks worldwide, and positioned luxury not just as a product, but as identity and aspiration. Over decades, LVMH expanded into fashion, jewelry, watches, wine, and cosmetics. The group became the ultimate symbol of global luxury power. And Arnault? He became known as the Wolf in Cashmere, the empire at its peak. At its height, LVMH wasn't just a company, it was an empire. Its brands dominated global runways. Its products symbolized wealth and status across continents. From Paris to New York to Shanghai, luxury demand exploded. Emerging markets created millions of new affluent consumers eager to buy into prestige. After the pandemic, something surprising happened. Wealthy consumers didn't slow down, they accelerated spending. Revenge shopping became real. High net worth individuals poured money into handbags, watches, and fine jewelry. Luxury sales surged. LVMH stock soared. And Arnault's fortune skyrocketed. For a brief moment, he surpassed tech billionaires and claimed the title of the richest person in the world. The luxury king had officially arrived. But empires at their peak often hide invisible cracks. The cracks begin to show. Luxury depends heavily on confidence. And confidence began to weaken. China, one of the biggest drivers of luxury growth, started facing economic challenges. Consumer sentiment shifted, property markets cooled, spending patterns changed. Government scrutiny on conspicuous wealth also influenced buying behavior. In the United States and Europe, inflation rose. Interest rates climbed. Investors grew cautious. Luxury purchases, often fueled by optimism, began normalizing. At the same time, younger consumers, especially Gen Z, began prioritizing experiences over status symbols. Sustainability concerns grew louder. Brand loyalty became less predictable. The unstoppable growth story started slowing. And when growth slows in luxury, markets react fast. The billion-dollar drop. Then came the headlines. LVMH shares experienced volatility. Market value declined. Arnault's net worth dropped by billions. He lost the top spot on the global rich list. Now, let's be clear. This wasn't bankruptcy. It wasn't scandal. It was something more subtle, but just as powerful. A shift in momentum. Investors began asking tough questions. Is luxury growth peaking? Is demand normalizing? Are valuations too high? Can post-pandemic momentum truly be sustained? For the first time in years, uncertainty surrounded the empire. Competition and industry pressure. Luxury today is not the same as it was 20 years ago. New independent brands are gaining attention. Digital-first marketing has changed consumer behavior. Social media influences trends faster than traditional fashion cycles. The exclusivity model is harder to protect in a hyper-connected world where trends go viral overnight. Scarcity must now compete with accessibility online. At the same time, competitors are becoming more aggressive, fighting for the same high-net-worth customers and expanding rapidly in Asia and the Middle East. Luxury is no longer just about heritage. It's about relevance, cultural influence, digital storytelling, and relevance must constantly evolve. The succession question. There's another layer to this story: leadership. Bernard Arnault has led LVMH for decades, but he is now in his 70s. The big question is, who takes over next? His children hold key positions within the company. Observers speculate about succession plans. Investors quietly wonder how smooth that transition will be. History shows that empires built by powerful founders often struggle during leadership changes. Vision, discipline, and strategic instinct are difficult to replicate. So even if the business fundamentals remain strong, uncertainty about the future adds pressure. Is this really a fall? Now here's where perspective matters. Luxury is cyclical. High-end brands have survived recessions, crises, and global shifts before. The ultra-wealthy still exist. Aspirational buyers still dream. LVMH remains one of the strongest luxury groups in the world. Its brand equity is enormous. Its global footprint is unmatched. Its balance sheet remains powerful. So is this truly a fall, or simply a correction after extraordinary growth? Sometimes, when you're at the very top, even a small drop feels dramatic. What this means for the future of luxury. The luxury market is evolving. Growth may become slower, but more selective. Brands may focus more on ultra-high net worth clients. Digital experiences will become more important. Asian markets will remain critical. Exclusivity may shift from products to personalized services and access. The question isn't whether luxury disappears. The question is who adapts fastest, and whether the strategies that built the empire decades ago can still win in a world defined by digital speed, economic uncertainty, and generational change. Because in the world of power and prestige, staying on top may be harder than getting there. And so the story of Bernard Arnault reminds us of something powerful. No empire, no matter how polished or profitable, is ever completely immune to change. From building LVMH into the most dominant force in global luxury to facing market slowdowns and shifting consumer trends, his journey shows that even kings must adapt to survive. But here's the bigger question. Is this truly a fall, or simply the calm before another strategic comeback? Luxury has always been cyclical, and history has proven that the strongest players often rise again when the dust settles. As global markets evolve and leadership transitions approach, the next chapter of this story could be even more fascinating than the last. And we'll be here to break it all down. If you found this deep dive valuable, don't forget to like the video, subscribe to the channel, and share your thoughts in the comments. Do you think the luxury king will reclaim his momentum? Stay tuned, because the next story might surprise you even more.